Good morning everyone, this is Sandhya and welcome back to the channel. Today is Wednesday 21st of Jan and in this video we'll quickly cover the market recap, key news, sector performance based on the Ichimoku indicator, corporate results and global cues. Global markets are under pressure today after former US President Donald Trump threatened fresh tariffs on 8 NATO countries over the Greenland issue. Wall Street reacted immediately. The S&P 500 fell more than 1%. The Dow dropped over 600 points and the Nasdaq slipped around 1.5% in early trading. Trump announced a 10% import tax starting February on goods from Denmark, Germany, the UK, France and other European nations that oppose his plan to bring Greenland under US control. European markets also moved lower while bond yields rose, showing growing investor nervousness. This is a classic example of how markets react to uncertainty. Even before any tariff actually comes into effect, the fear of a trade conflict is enough to push markets down. Corporate fund SRF delivered a strong set of Q3 results, beating estimates across the board. Revenue came in at around 3,700 crore rupees, growing over 6% year on year with sequential improvements. EBITDA stood close to 780 crore rupees, up nearly 26% year on year, supported by better margins. Net profit jumped almost 60% to about 433 crore rupees, mainly driven by a strong performance in the chemicals business. Along with the results, SRF board approved a 180 crore rupees investment to set up a pharma intermediates facility at Dahej, announced a leadership updates with Samir appointed as a president and CFO, and declared an interim dividend of 5 rupees per share. Overall, SRF's Q3 performance highlights improving a business momentum and confidence growth plans. India's IT sector, however, saw a notable hit in Q3 earnings due to an implementation of the new labor codes, which forced companies to book large one-time provisions for employee benefit liabilities. Tata Consultancy Services reported a 2,128 crore hit, dragging net profit down above 14% due to higher gratuity and leave lost under the new laws. Indigo is facing a major financial hit after the massive flight disruptions in early December that left over 3 lakh passengers stranded across the country. The airline could incur cost of over 2,000 crore, including ticket refunds, regulator mandate passenger compensation, hotel accommodation, ground transport, courier delivery of baggage, penalties and other expenses linked to the kiosk. Between December 3rd and 5th, thousands of flights were cancelled or delayed, forcing Indigo to issue refunds, pay compensation under civil aviation requirements, and offer goodwill travel vouchers worth of 10,000 to affected passengers. Quickly look at FII and DII activity. FII continues to remain sellers in Jan so far. FII sold nearly 29,000 crore rupees worth of stock. Even today, FII were net sellers by around 3,000 crore, showing continued pressure from global investors. On the positive side, DII are supporting the market, with DII buying over 38,000 crore rupees this month, and even today they were buyer of more than 3,600 crore. This shows the FII remain cautious due to global concerns, and strong DII buying is helping the market to stable. Nifty opened slightly gap down today and selling pressure continued throughout the session. On the daily chart, Nifty closed below the Ichimoku cloud, signaling slowing momentum and rising weakness in the short term. The index ended the day at 25,232, down nearly 1.4%, where the immediate supports are seen at 25,140 followed by 25,070 and strong support nearly 25,000 level. On the upside, resistance are seen at 25,350 and then 25,450 followed by 25,580 and 25,650 level. Overall, the trend remains cautious unless Nifty reclaims level above the cloud. Bank Nifty opened with the gap down today and closed at 59,404, down by 0.81%. According to the Ichimoku indicator, it's trading near the cloud, signaling indecision, and further momentum may fall into the cloud, which is a no trade zone, where the supports are seen at 58,645 and 58,970 level. while the resistance are placed at 59,550, 59,670 and 60,000, indicating potential range-bound momentum for now. Remained under pressure today with the broad-based selling across sectors. Pharma, auto, metal, financial services, IT, infrastructure and FMCG were the bearish sectors, where PSU banks were the only sector outperformance, supported by exceptions of stable asset quality and strong earnings momentum, but ended up showing in a negative on today basis. Tomorrow is going to be a busy day as several companies announce their Q3 results, including Andhra Cements, Anantraj, Bajaj Consumer Care, Bank of India, Dhanlakshmi Bank, PNB Housing Finance and more, making it a key day for market watchers. If you want, you can just pause and have a look. I have attached the top gainers and losers for the day for your reference. This video is for educational purposes only, as I am not a SEBI registered advisor. Please do not make any investment decision based on this content. If you found this video useful, please subscribe to the channel and leave a comment. It motivates me to do more research and create a better content for you. Thank you and see you in the next video. Bye.